Morning, traders. So it is Monday morning, very early in the UK, and I am just decided I wanted to wait until after the French elections. The results were out before I recorded, because not only would I just want to, I think that's relevant, but also because it might impact the markets technically. Okay, so let's have a look at the fundamental concerns. This is for Monday, the 25th of April. I really don't know where the time is going. It's crazy, but there we go. So US inflation still obviously relatively high. I know that around the world as well, they're monitoring it, and probably their first go-to tool is going to be hiking rates, which is just the best thing to do, calm things down a bit, and obviously try to solve the supply chain issues and try to get COVID under control. That's really it, the big picture approach. Great news out of both elections that came out of France and Slovenia this year. The Democratic parties were elected over the autocratic parties, which is great, or pro-Putin parties as well. So that's a really, really good sign. It's being rejected. It should be. We've evolved over since humanity's inception to introduce democracy as opposed to a single ruling class. So that's really good. So in this respect, it's also nice to see, obviously, Ukraine is still holding their ground. In fact, they've started offensives, which I really like to hear. So I'm optimistic there, as again, just adding, obviously, war is tragic and there's ridiculous deaths. And so hopefully at some point, Putin will be held accountable for that. So the other thing, obviously, in the US, midterms coming up in November, be very aware that the rise of fascism, very strong. And of course, almost all, I think something like 99.9% of all election fraud in the 2020 elections came from Republican Party members and voters, and also they're working very hard to overthrow the coming elections as well and inject doubt into the outcome. And this is just standard fare for authoritarian cultures. Okay, it's just normal. This is just how they do it. Okay, inflationary risk continues. Obviously, that's it. But good, that's a little bit of good news as far as I'm concerned. That's a good sign, and this is part of the reason why these authoritarian cultures have to overthrow elections, because they'll never get voted in on the numbers. They always have to do that. Okay, so in terms of news this coming week, so we'll have non-farm payroll will be next Friday. In other words, almost 2 weeks away. And of course, this week, what I'll be focusing on really is any news to do with, look, first of all, the Japanese yen. I want to see if there's any kind of reaction to that. It's very overextended. It does need a healthy correction. I'm looking for that. We'll have a look at that in the charts. And of course, just want to have a look and see how that's impacting the US dollar as well. So basically, all of the currencies, any announcements just with regards to rate hikes or what their concerns are, or the rate of change of inflation, is really where I'd be keeping my eye on. Okay, that's it. That being said, let's move across and head over to the charts. All right, so we can see, if we look at the volatility index, we can see that it has indeed started to climb. This is not a surprise. Keeping in mind that we anticipated this as a result of all the things going on this week, but what I'd like you to see is just that kind of steady rise as well. Daily rise quite strong as well. So my expectation for now, and a strong weekly candle, my expectation is for this to attempt to head back up to 30 and 40, or potentially beyond. So this is in line with everything that we can hear and see, whatever's going on, and so pretty normal there. With the US dollar index, you see a really good, strong pullback into nice round number 100, and a continuation from that side. It's definitely a very healthy trend. This is intentional, meaning it's not accidental. It's not necessarily, although it's overextended, which it is, and it's going to be due for a correction. This is looking pretty good. I mean, it's one of the strongest, healthiest trends I have seen in a long time on the dollar. So that continuing to head up towards big round numbers. So 101, which it is at now, 102 most likely, and at some point I do expect it to have a bit of a reversal from that. So at this point, really look at the monthly will give us a sense of that. So where it is right now could be a bit of a turnaround, but we're kind of past the 101. It could still happen. Otherwise, I'm expecting this to continue to 102 this week. And therefore, if we move across to the majors, I'd be expecting the euro dollar here to start to head low. You can see it's already started to break through to the downside, heading down to 1.06. So that for me provides some good, strong, I can see there's definite bullish divergence here on the MACD. No doubt about that. So I am wary of that, but I would expect this to attempt to continue down before maybe seeing a stronger rejection. Sterling as well, big strong breakdown on Friday, continuing through at the moment. You can see here I actually need to start putting in new levels, which I'll do later today for next week. But yeah, we can see it heading down to 1.2650, so weakening there. So that nice high probability trades in line with a stronger US dollar. Look at the Aussie dollar as well, getting kicked a little bit further down. You can see in terms of that monthly, moving a little bit lower. So let's just shift this down to say 75 units. Looking at that, let's have a look at Kiwi dollar. Exactly, very similar here. We can see strong dollar deciding already what's going on with the majors. Dollar yen is just very, very much overextended, is due for a bit of a correction. But I think, and you can see it's overextended on the weekly, it's overextended on the monthly. At the same time, and it is at a major level, but at the same time, unless we get that reprieve from the dollar, it's going to be hard for dollar yen to come back down. Dollar Swissy also pushing on a little bit higher. And actually, I'm okay with that because it's been consolidated for a very, very long period of time, going back to almost well over a year. It's nice to see it break out and start coming back up into these next levels here. So again, I'm looking for pullbacks and moves in line with a stronger dollar. But euro dollar is better a lot of people feel that it's inversely correlated with dollar Swissy. They're not. They are generally inversely correlated, but not enough that I would rely on them in terms of hedging. I think that's a bit of a I'm not sure that is the most efficient approach. My point is that I still think euro dollar is a better trade than dollar Swissy. Okay, now let's have a look at dollar CAD as well. Let's go on to that. Dollar CAD also pushing a lot higher, but you can see the resistance that it's had here in the past. It has to really get past 1.3, but it is pushing a lot higher. So we'll see how that goes. Again, not very high risk in terms of trading. Let's have a look at dollar ruble. Okay, so the reason I brought this back in, and I should always have kept it here, is to see how quickly we've reversed. We've come back in line with that kind of a reversion to the, let's call it a reversion to the mean. We can see we've come back down into the previous levels over here. And so I think that's important to highlight that. That's such a strong rejection. It is possible we could start to break below that, but we'll see. In the meantime, I expect to see, and I'm going to look to see how price monitors in this area. But I do think it's really important to highlight that it did appear as though all is lost. It's not necessarily, it's come back up, it's increased in value, it has strengthened a little bit. And I don't really believe that is due to anything positive necessarily about what's going on with Russia. I do think it's potentially just a good trading opportunity and also potentially just a revision to the mean. Okay, Euro Aussie. What I want to do here is I'm going to go through these pairs, the cross pairs of interest, just to show you here a really nice bullish monthly candle, almost closed. I really like the fact that we pull back into the moving averages here. So we have the potential for a continuation on the weekly. But I would say on the daily, we've now officially broken that downtrend on the daily. So we are now more in an uptrend on the daily. And that monthly, if we do finish high, we're going to finish with a very strong bullish candle, which is going to imply that monthly is going to push a lot higher. So at least initially, I'm looking for longs for day trading purposes to the upside on that, as well as on pound Aussie. Let's just jump straight to it. Also nice uptrend on that. Got a break through this level, but I expect it to continue, also forming a potential strong bullish candle here. You can see that gives it a big move to the upside. So it's just a weekly, it's not a downtrend, because we were in an uptrend, we've broken that uptrend, we don't have a fixed trend yet. So it will be interesting to see what happens there. But I'll be looking for buy opportunities to the upside, at least initially. Then having a look at pound yen, we've got that swing high, very much needed, obviously overextended. The question is, will it come back within the range? I'm not really convinced that's the case, but it'd be nice to see it do just a healthy correction back down towards these lows over here. And then with pound CAD, for example, looking to see it break those lows. There's definite, again, lots of bullish divergence on the indicator over here. Excuse me, but we have broken through these major levels, and again, this is starting to become overextended, and I do anticipate at some point it will correct, but at the moment that trend is still very strong to the downside. Then having a look, let's just say pound Aussie, as I said, moving to the upside. Pound Kiwi as well also has shifted to the upside and broken through this level. It's struggling a bit with where it is now. Look at the big swings, like a big move up on the weekly and a big move down, and then kind of back to, it's still range bound, and actually that supports the idea of it potentially heading to the upside then. Okay, moving on to Aussie Swissy. Break below these lows, strong rejections of the highs. Look at that failure and exhaustion on the weekly. So now I'm looking for shorts on Aussie Swissy, which will produce potentially a nice bearish candle and a move down to the bottom of the range. Finishing off with Aussie yen, which has started to break down. So finally, I've started to get those opportunities. I'm going to be looking for moves further down. Ideally, the weekly is really going to drive it back down towards these highs, or potentially even back down towards the lows. So somewhere down into this area, which in terms of Fibonacci retracements from a monthly perspective puts me somewhere between that 382 and the 618. Okay, and then finishing off with Kiwi CAD. Also, you could just see CAD pairs, CAD crosses, but that really nice bearish consolidation breakout has fulfilled very nicely back down towards these levels. So more cautious as we approach these levels, but still principally looking for trend continuation to the downside on quite a few of those CAD pairs. Okay, let's move on to the commodities. Overall, still building up into potentially what's going to ultimately, or what could ultimately lead to a consolidation breakout. We'll see how it unfolds. If it comes back up towards the highs from where it is here, then I'd be expecting a consolidation breakout to the upside. It's trying to stay very much where it is. It had a big move up. It's trying to tread water, recoup some energy, and then continue onwards. We'll see how that goes. Alternatively, if we start to break below these lows, especially if we break below the 678 or below this daily low here, then I'll be expecting corrections further to the downside. Okay, gold. Gold acting, very choppy, very deep range-bound kind of moves. I was looking for it to continue up here towards 2,000. It did indeed tap that, but we're on our way back down now. Certainly back down to 1,900. Let's see if there's enough buyers to keep it at 19 or above 1,900 and then push it back up. So it could just be range-bound for now, but certainly looking for moves down initially to see if the level holds. I'll be looking for a strong bullish rejection of that. Then potentially moves back up towards 1955 or back up towards 2,000. If it's a higher low, I'll certainly be looking for moves up to 2,000. If it breaks below here, I'll be looking for 1865 will be the next one. Silver. Big moves down. You can see largely that's a downtrend on the weekly, and actually it's a swing high on the monthly. So that implying that we're going to see further moves to the downside, certainly down towards 22.65 or down towards 22.21 even, but I think more 22 to test that level on silver. Copper as well, you can see starting to break down, go a little bit low. We've got that strong level of resistance. If we break this low, then I think the implication is also clear. So if that is the case, then it's fair enough or reasonable to expect that gold might go a little bit further down as well. Okay, natural gas. Strong bearish rejection candle there, very much overextended, and so looks as though that's going to be taking a bit of a breather here. We've already gapped down below the lows of that, so I think continuations to the downside, back down into the old highs at the very least. In terms of that, we're still in an uptrend on that weekly side, still on an uptrend on the monthly, but the question is to how far it's potentially going to come down before it settles. Moving on to crude oils. So crude oils, the pattern here, very, very similar, some sort of effectively, actually, it's really interesting if you look at it here. We've got equal lows here, but lower highs here. So if we continue, if we come down from here back down to these lows, that would be hinting actually at a consolidation breakout to the downside, which would see then oil. And this is something that could unfold this week, but I think is more likely to unfold over the next 2 or 3 weeks. See price here, breakthrough here, then it would be heading down towards $70, which brings it back in line with these old highs here. So interesting to see that be the case. Conversely, should we break the highs over here at $116, then I would expect it to continue high. But right now, it is leaning that much more towards boost to the downside. Very interesting. Brent crude. Okay, also same thing again. We've got a bearish candle at the moment. It's an inside candle. We do look as though we're building up to a bearish breakout over here. We've got lower highs coming into a flat level around that $100 mark, which means if price breaks and closes below that $100 mark, that would imply that the weighting is shifting, the sentiment, and we're going to see a correction back down into these levels over here. More of a monthly retracement would be the healthiest way to think about it. $80 or perhaps down towards even as far as $65, $66. Sugar. All right, sugar bumping its head up against that $20 mark, producing that bearish monthly rejection candle so far. We've still got a week to go, so it could work its way back up to that level, break above it. That's nice. That'll be good for the continuation to the upside. If, on the other hand, we close down for the week, right down near the lows or below those lows, then I think it's fair to say sugar is going to be finding its way down as well. Coffee. So coffee, that exhaustion, is now trying to stay where it is and break a little bit higher. But again, we could see something very similar here where we get that exhaustion depletion. And again, it just gives up, similar to was it Aussie CAD that did that? And then just, or Aussie Swissy, and then see it start to hit lower if that's going to be the case. Right, wheat. Okay, so wheat again, yes, we can see oil looks like it's potentially building up for a bearish breakdown. And the question if that's going to be the case here. So we haven't got enough information yet. We're still sitting inside the entire range of April, sitting inside March. And actually, the clues would be more if we break above, let's call it 1168, that we were going to be continuing to the upside. If we come back down towards the lows here, we're likely to finish to the outside, but we're stuck in no man's land, which can be a little bit frustrating. Cotton as well here. Remember, I was talking about bearish. There's some bearish divergence here. It is in an uptrend, but a break of these lows means we're going to see a deeper correction. It is certainly struggling there, so we could see it looks much more obvious on the monthly there. There's a struggle there with depletion forming in those candles, and if we get a second one and a break of that in April, May, we're going to see in May, we're going to see a correction back down towards, say, 100, potentially as far as that, or as little as 120. But it's had a good move up. It's due for a correction anyway. Interesting. Just seeing commodities. It could be seasonal, but we're just seeing that with commodities. Okay, moving over to the global indices. I think it's really important to state here, we did break the high and then have a strong rejection of that. Okay, so it's unusual that that is going to be the case, and I think that that is in itself quite something we need to be paying attention to. Again, the month isn't over. It is sitting at a level of support, but the overall behavior is not strong. If it was super strong, we should have closed high. We shouldn't be getting rejected off those levels, and we really are. So what I'll be looking for this week is breaks to the downside or to see if these levels hold. Alternatively, should we finish back up at the highs, I would see that as a positive. But overall, we are, that's not, if anything, it's a sign of volatility. Okay, so the S&P 500 as well, you can see a strong rejection off that. It's still an inside candle, bearish inside candle on the monthly there. Still in an area we can turn around. If we break those lows, I become more bearish. If we break the highs, again, I become more bullish. And right now it's ping-ponging between the two. I think this week, ultimately, if we are range bound, it's more reasonable to expect it to recover off the lows and push all the way back up to the highs. NASDAQ as well, coming back down. You could see there, almost broke the high there. Full long-bodied bearish candle. In order for me to maintain optimism about this come May, I need to see this finish with a rejection of the lows, and it's just not looking super likely. But all it takes, again, is one really strong bullish week. If there's something that comes out of that, we'll see, but it's not looking likely. Okay, so I'm just preparing myself for potentials for breaks of these lows, potentially seeing moves a little bit lower, and that's still acceptable. It just is that it's nice to know which way to go, because we've had this entire month ping-ponging between these levels, and that can get very frustrating for traders. Okay, so here again, we've had a break on the Russell 2000, a retest, and a move at a close low. This could be a sign of a continuation to the downside there as well. So we're going to see this reflected in the individual equities when I go have a look at that in a moment. So the FTSE as well, closing near the highs. Actually, so far they seem okay. There's no real, I'm not going to call that bearish divergence because it is a lower high, but looking for price to see if it can stay where it is or come back down, test these levels, and then continue to the upside. We did have a really nice, happy, healthy, strong bullish finish, and I want to see that continue. Let's look at the German DAX as well. You can see it's actually gapped down at the moment. Now, just keeping in mind that that would be impacted a little bit by the election outcome. And so based off this price action here, it does look so far as though it's going to come back down towards these lows. Let's see if that is indeed the case. Euro stocks will be something similar. There we go. It's still quite up near the highs above that 450 level. In order for me to be optimistic, again, I need to see this close this coming week above these highs here at around about that 470, 465 mark. Alternatively, it does look indeed as though it's going to continue to slip a little bit lower. The Nikkei and the ASICs are the last ones on my list. Also here looking like a bit of a bearish candle within not quite a downtrend, but almost looking as though it's certainly under pressure and starting to push and move a little bit lower. So there could be some good opportunities there. But again, always just that risk as price approaches those levels of support where it can bounce off buyer orders. Just noticing that bearish rejection, that's now another rejection off the highs here on the ASICs. Excuse me, and that could lead to, again, moves to the downside if we're going to see if it's going to be range bound for now. There's that just ongoing uncertainty, and it could simply just be something tied to something such as inflation. Okay, moving on to the equities of interest. We've got a very small bullish candle here with Royal Mail. Not necessarily enough here to indicate if price is going to come up and break this trend, but certainly does show some interest again in trying to break and move a little bit high. We did get a move up here. We didn't break this, so this downtrend is still intact. So we could see that continue to go a little bit lower there. So not out of the woods yet. Amex as well, strong rejection. Look at that, really another lower high and another bearish rejection of that. All of that, really, let's see if this 176 level holds. Alternatively, and if it doesn't, I am solidly expecting price to come back down in towards the next level of this range. But you can see here, we've just got a series of lower highs. So we keep getting knocked back. That momentum is almost feeling as though it's picking up in favor of the bears. Here we go again. We've got another strong move down, another bearish continuation candle to the downside. We're coming up to a level at least. That monthly as well starting to close lower, whereas we've had rejections in the past. We're coming back down. This just hinting at it could be eyeing out 140. We could see the market hitting a lot lower. So that could be interesting. ARC Innovation. Look at that solid continuation back down to the lows, but that doesn't necessarily at this time mean we're going to continue down further. We could still find support at this 49.50 mark. So I'll keep an eye on that. But if we break below that, yes, then I think it's fair to say we're going to move down towards 36.20 if this level doesn't hold. So again, it's same as last week. It's like, well, we need to see a close higher for that. Sorry, let me slow down and say it again. In order for there to be green shoots and that optimism. Okay, so AT&T has actually had a relatively, compared to the others, relatively good week. Run into resistance here, so I want to see how that ends. If they can continue to move a little bit higher, but right now it looks as though they formed a bit of a swing high. They could be moving a bit lower in the coming week if everything else does. Berkshire Hathaway. All right, so Berkshire Hathaway is experiencing, to me, what looks like so far a relatively healthy weekly correction back down to 324. What I'll be looking for here again is a bounce and a close, a nice little bullish candle or an indecision candle to form in this area, which could be the beginning. Again, yes, we had a breakout on the monthly. We haven't come back and retested this. So again, we could be sitting, if we don't get that bullish candle at the end of the week, if we come down and close below this level, then for me, that's going to be a monthly correction coming back down to 300 over a period of weeks, or potentially 1 or 2 weeks, and we'll see how that goes again. BP, bit of weakness for me here, but that makes sense in line with what we're seeing on crude oil. We'll check if it's the same for Exxon. Same thing again, we're seeing a bit of exhaustion, depletion after big moves to the upside. So moves back, pulling back down is a possibility if we start to close a little bit lower, breaking these lows along here on the daily. Coca-Cola. So, as I said, Coca-Cola is usually the jewel in the crown for Berkshire Hathaway. At least that seems to be visually indicating that. Yeah, a little bit of some depletion coming in here around about that 65 mark, and so pull back into 61 would make sense. But if nothing else, looking for a bullish candle on the daily and an attempt to move higher. But what could happen is a nice bullish candle, then an attempt and another rejection similar to this, and then a deeper correction by the end of the week. All of that can happen within the next 5 days. We'll see. General Motors certainly looks as though it wants to test a little bit low. Look at that. It's just continuing to head back down towards these lows. We've definitely got the bullish divergence, but it might not be enough at this point yet. Sort of at this point here, just to see it. If it's going to break through here, it's going to head down and test this level. But if it can hold, the bullish divergence will increase and will start to break above the highs and start to unfold as more and more bullish. JP Morgan, same thing, coming back down to those lows. Fully sort of now committed within this range, so 106 is a very real possibility. So yeah, it does look as though across the board we're going to get quite a bit of bearish, potential bearish corrections. Again, there's no doubt there is some bullish divergence here. Solid weekly candle closing almost below, closed below the lows. All of this indicating possibility or an intent to head further down. Okay, let's have a look at Morgan Stanley. Back down, look at that rejection. That's a failure, just a real attempt to come back up into these highs and just get knocked back again. So will the level hold, or is it going to continue down? That is also a possibility, of course. Netflix gapping down, bad results that came out right down below these levels. So we are seeing quite a strong correction. And this kind of behavior, where especially when we see it in some of the others, is going to start to induce a bit of panic and fear, which will obviously compound it. So that is very realistically or very likely one of the contributing factors as to why we are still seeing a correction. NVIDIA also back down into this area, strong rejection, a strong correction back down into the 20 moving average. It's not a bad area for it to turn around in, as long as it's within this green box. That for me, especially if it produces a bullish candle, for me, I like that as a bullish opportunity, or at least for me, it's signs that the buyers are returning back to the market. But alternatively, if we just fall right through that, we're coming back down to that 150 mark. And all of these things are now actually on the table. We can see here again, let's look at PayPal's close below these lows, back into its breach of structure. It's got a bit of bullish. There's no doubt there's bullish divergence, which means it's kind of running out of steam, but that doesn't mean the journey is over just yet. You can see even here on the monthly, it could come back down towards these lows here and bounce off those. But for now, it does appear as though it's going to inch its way lower. Spider, same thing again. Look at that, just closing right near the lows. I think there's a theme here. I don't know if you've spotted it, but it looks to me as though that's the case. Look at Spotify, boom, right down at that level. So that's interesting because it hasn't been below this since December 2018. So that is going to be interesting. And again, I would emphasize, it's really important to understand that this is not a reflection of necessarily of the underlying value of these individual companies. Let's have a look at Tesla. Tesla's holding where it is at the moment, but certainly I would say if the rest of the market comes under pressure, it would be reasonable to see Tesla come back down towards 900 here and see if that's the case. I'd be looking for it to break these lows here. Let's call this 970. I want to say 975, but it's going to be 972 and head back down towards 900 if that's going to be the case. Certainly if the rest of the market is under pressure, it is reasonable to expect it to do that. And Vanguard as well, starting to close a little bit low. This is similar, excuse me, to say Morgan Stanley or JP Morgan. We could see that these rejections here are not necessarily holding, and so we could find ourselves closing lower. Okay, so just to recap with equities, A lot of them have closed near the lows. There is some bullish divergence showing on the daily, but with the way in which they're closing, and especially how close we are proximity to the end of the month, we'd have to see a major reversal to change the sentiment going into May. What it does look more likely is that we're going to see the markets staying where they are or heading lower rather than recovering and heading higher for the time being. Let's move on to Treasuries. Treasuries now starting to put the brakes on a little bit over here. Bit of another green candle. So we had a bit of a green indecision, another indecision, and another green candle. This is absolutely starting to put on the brakes. So I am looking this week to see if we start to push higher and break these highs. There's not a lot of bullish divergence there, but the price action itself is shifting from strong bearish sentiment, more green candles starting to come in, closing near the highs, flattening out here, at least bullish weekly candle, all of this implying a swing low on the weekly for now. So expecting that to head up, and that starts to make sense. That might mean that we're starting to see a bit of flow of money going from equities through to bonds, which used to be the case. It's possible there's just more mechanics in the markets these days, and it doesn't really happen. Look at this bullish candle just staying where it is, a couple of bullish candles in this area. In fact, 4 bullish candles within the last, let's call it 9, which is much more than we would have had. So almost half of them are green now. It's a good sign of potential bullish intent if we could break the high. Okay, going on to cryptos. We know the rules that if equities are going to take a hit, so are cryptos. That's not necessarily a bad thing. They've had a good run. A healthy correction would provide, let's say, the millennials with entry opportunities into those markets. Okay, but yeah, I would expect if we're going to break these lows, we're going to come back down towards 30,000. If we do see a big shift this week, we'll see that as well. Ethereum will come back down towards these lows. Really, it'll be very interesting to me to see if we can hold off these lows. There was an attempt to go higher, and it seems to so far be failing, and unless we get that big turnaround. It would have to be something really, really big, something we haven't had in the last 6 months that injects a huge amount of optimism. Something, it could be a combination of things, I suppose. Language from the Fed saying, "Oh, we're fine now. We think it's good. We're gonna push out our rate hikes," and maybe there's a shift in the war sentiment, something like that. That would see just a drop in that. Don't forget as well, we've got that dollar strength as well increasing. So we've got it effectively feels like it's safe haven behavior. We've got the yen increasing, the dollar strengthening. But we don't have gold moving, which you would also expect as another factor. It doesn't have to, but there you go. So also Cardano pushing near those lows. Binance still a small bearish move down towards these lows. Again, we could see that move low. They're dropping less with respect to some of those markets, but it's still very much the case. They're back down towards these lows with Solana. So that's it, really. Just wrapping up. Cryptos look like they're pretty much tied at the hips. Still very much so. And so if you only follow cryptos and you don't follow equities, you're not going to be aware that the reason that they're moving lower is because they're just another asset class that money has been flowing into, and you might be seeing it through through blinders. So just be aware that there is a relationship between those. That's it from me, ladies and gents. Please trade cautiously and go slow. How does it go? What's the expression? Slow is smooth, and smooth is... There's an expression, slow is smooth. Something like slow is smooth and smooth is fast. Anyway, that's it, ladies and gents. I'm going to leave you with this. Also, this coming Friday, I am speaking at an IX Media event in London at Holborn at the Grand Connaught Rooms. If you are interested in joining me, please message me. I might be able to arrange a free ticket to my masterclass. There's a 3-hour masterclass that I will be teaching. If you are interested in attending, then make sure that you message me in the comment section. Do it in the comment section, and I will try to arrange a free ticket for you. It'd be nice to meet people face to face as well. Thank you very much, and have a great week.